Hello friends, in the series on the income tax cases, today we will discuss a very important case on section 2 subsection 22 clause E. The name of the case is CONTINENTAL Traders Pvt Limited versus Deputy Commissioner of Income Tax, and this case has been reported in 106 ITR Tribunal, page number 356. The matter has been decided by AMRITSAR ITAT and the date of the judgment is 11th July 2023. In this case, the Assessee is a private limited company and the Assessee holds near about 17% shares in a company GAPL. During the assessment year, GAPL advanced some loans to the Assessee company on which the Assessee company paid interest and deducted TDS accordingly. When the assessment proceedings were going on, it was the point of the assessing officer that the assessee is covered under section 2 subsection 22 clause E and the deeming provisions will be applied and it will be a case of deemed dividend. So the assessing officer accordingly made an addition of 32.83 lakh up to the accumulated profits. The assessing officer also gave the benefit of 1.17 crore of the accumulated profits which were being applied in case of deeming provisions in some another case. It was the contention of the assessee that this loan is not for the personal benefit of the assessee, because in section 2 subsection 22 clause E it is categorically mentioned that section 2 subsection 22 clause E is applicable only in case when the loan is given to the shareholder for the personal benefit of the shareholder. But the assessing officer went ahead with the addition. The assessee moved to the CIT appeal and the CIT appeal also upheld the order of the assessing officer for addition under section 2 subsection 22 clause E. When the assessee moved to the ITAT, it was the verdict of the ITAT that in this case the jurisdiction of section 2 subsection 22 clause E is not met. It is the prime condition of section 2 subsection 22 clause E that the shareholder should be registered shareholder and the loan given or the advance given should be for the personal benefit of the shareholder. Because in this case the loan has been given for the business purposes, business exigencies, and the assessee was duly paying the interest on that and was deducting the TDS. It was not a case where the loan has been given without interest and without any business purpose. So the ITAT in this case held that the addition made by the learned assessing officer under section 2 subsection 22 clause E for taxing the amount of rupees 32.83 lakh under section 2 subsection 22 clause E is not justified, because the assessee is not using that money for its own benefit but for the benefit of the company and for the benefit of the business. So friends, sometimes it appears that the assessing authorities tries to apply the provisions of sections without going into the integrity and without going into the submissions and the evidences brought by the assessee on the file. Because in this case the ITAT said that the assessing officer was not able to demonstrate that the loan given was not for the business purposes, the loan given was for the personal purposes. So in this case the jurisdiction of section 2 subsection 22 clause E was not met and applying the provisions of deeming dividend in the hands of the shareholder was not justified. At the end of this video, once again I am repeating the name of the case. The name of the case is CONTINENTAL Traders Pvt Limited versus Deputy Commissioner of Income Tax, and this case has been reported in 106 ITR Tribunal at page number 356. and the matter has been decided by Amritsar ITAT and the date of the judgment is 11th July 2023. Thank you, friends.